Alright, so look what it did. It returned right to the midpoint. Right to that midpoint of the inversion gap, smacked lower right off of that. So this trade will put me at about, so I was down about 0.8%, so this will make everything back that I just lost and some, obviously. Come on, just a little bit more. Alright, there we go. There's that sell side delivered. So as you can see, okay guys, GK the Trader back here. Another daily trade review. This is Monday, August 21st. And since it is a Monday, we're not going to be spending too much time on a higher time frame. Normally on Mondays, I'm relying more on the lower time frames, just because Monday usually sets the stage and gives me more information for the rest of the week to trade. But nonetheless, we've swept sell side here on the daily time frame, dug into midpoint of this order block here, in a discount obviously. Friday created this indecisive candle, letting me know that it wants to retrace up into this daily fair value gap and potentially this higher one now. And with that being said, let's go drop down to the 1 hour time frame. You see here, we open up Sunday. London makes an intermittent term low at new week opening gap, expansion higher, leaving this imbalance behind. So I'm going to go ahead and mark that up. Before I go to the lower time frames, take a look here. You can see we dug up intraday. We dug up into these up close candles, found resistance initially. So this will be one order block. You see about the midpoint of that. And then this black line is simply the daily fair value gap high. You see we traded up into that. Now, yes, I know we have a bullish reversal here into the PM session, but we're focusing on the AM session trade, which was primarily focusing on shorts. So if we take a look here, once we hit those premium arrays here, we have this 15-minute imbalance left behind that I wanted to draw to right here. I'm not going to mark it out because you can see it. And then we have sell side liquidity here. Now, ES took out this London low. We failed to do that on NASDAQ, and now we're trading higher on a bullish scenario. But once again, we're not covering that here. Let's drop down to the 5-minute time frame. So we traded into a deep premium, daily fair value gap high, the 1 hour order block, stops are taken, and we have this large imbalance off behind along with the 15-minute time frame, but I'm using the 5-minute right here. And then we have sell stops trail below the swing low right here on the 5-minute time frame. So anyone that's been buying, their stops are going to be below here. And then generally on Mondays, what I've come to see come fruition a lot in the New York session, around the middle of that 10 o'clock hour, there's a tendency for us to have some type of reversal. So you can see that here. So let's just drop down to the 1-minute time frame. Delete that. We have an intermittent term high here formed on the 1-minute time frame. Swing low or swing high right here, swing high here, and then another swing high to the right of it. And then we aggressively displace lower. Now, as you saw from the recording, I entered on this inversion fair value gap. And I had people ask me why I used this inversion fair value gap. If you're in my live stream, you knew why. But before I get to that, let's mark out the discount arrays. So this is what I was primarily targeting. You can see that. And then we have this imbalance here. And then one more discount array. We had midpoint of this regular trading hour gap. So 3 high probability targets to the downside. And then if we take our fibs from that 9 o'clock low to the 10 o'clock high, you can clearly see the PD array matrix here. I was going short within a premium inversion fair value gap and then exiting at discount sell side, discount inefficiency, and discount regular trading hour gap. So with this inversion fair value gap, I'm going to go to the 5-minute time frame quick. And you can see if we take this swing low right here to the swing high, once we displace below this gap here, we can completely reprice that in. This should act as a balanced price range while we're going for our targets here. So this gap here. So you can see the inversion fair value gap within that 5-minute. So I'm going to change the color just so you can see this within the 5-minute. So once it bumps back up into the 5-minute and the 1-minute inversion fair value gap, that's when I'm going short. And then my stop simply goes above this 1-minute imbalance, because it could have easily traded up to this imbalance right here and then traded lower. That's fine. That's why my stop's allowing for that to happen, because my stop was above this swing point here. So that's the rundown on that. Honestly, it was a pretty simple trade. Not too many moving parts going on here. Nothing really special. But this is everything I used for my trade today. Nothing more, nothing less. Trading doesn't always have to be complicated and have 15 different confluences. And you can see that here. So I'm actually going to flip the ES quick. So if we look at ES, this black line also is the daily fair value gap high. So now what do we have here? We have 3 drives higher above the buy side and into that premium daily fair value gap high. So look, stops were taken here, stops were taken here, 3 drives into an old high. Beautiful. And then we get this very aggressive displacement here, and then goes for the sell side liquidity, which would be resting below previous hour's low right here, and then trades down to both new week opening gaps and that London low there. And let me show you that quick. So the London low here, sell stops trailed from those who were buying and didn't take their profit or whatnot. So yeah, I think that's going to wrap this up here. If you like more in-depth reviews and this is too simple for you, you can go to my past 3 reviews. I believe those are more in-depth trades.